Hey everybody, Alex here with Momentum Charting. I hope you are having a fantastic day. Today we are going to go just a little bit off script, talk about some market theory. Yes, do some analysis on broad markets, but talk more a little bit about some things that I think are really going to help you with your overall trading. If you have not yet done so, jump down below, hit the subscribe button, hit the bell notification. Doing both of those will make certain you do not miss a single update from this channel over the coming days and weeks. So guys, let's jump into this quickly. And since I started this channel about a month ago or so, I know I've harped on this topic with you guys from time to time, but it's just something that drives me crazy. I mean, I'm still getting every single day in my feed the videos that are the FUD videos about markets crashing, a huge 15 to 20% crash right around the corner. It's a nonstop barrage, and literally it's not just been a month or so that this has been happening. It's been since about 2 months after the lows of the COVID crash, around April, May 2020. It's been well over a year, right, since it's been happening. But people have been just waiting. A lot of people completely waiting, no money in the market, just because the intensity of that COVID crash was so significant and scared the crap out of so many people in the markets and so many market participants. But people have been kind of waiting on the sidelines on these markets for a long time now, waiting for them to reverse course, and it's been just really kind of intensifying, right? Especially over the last 2 months, just seeing these constant barrage of videos and market analysis telling you the markets are going to crash, get ready for a massive correction right around the corner. And you know, the reasons to me that they're saying those are just I don't know, that's not how I determine where markets are headed and how the trends are. They use things like, you know, M1 money supply, real inflation data rates. Some people are using cycle analysis, or they're using you know, the Elliott waves, or they're using Fibonacci relationships between highs and lows, or they're trying to utilize time relationships between all-time highs, moon phases, what the Fed is saying. I mean, is the Fed hawkish, dovish? They're using all these different types of things to determine, you know, what the overall trend in a market is and what the tipping point or catalysts are going to be for a market, a massive reversal in the market. And to me, guys, it's, you know, I used to be a proponent of some of this stuff until it just, none of it ever worked for me. And additionally, as these kind of timing tools that people try to use to determine overall trends in markets, I've read all the popular trading books out there, right? And now if some of these have worked for you, I say more power to you. That's fantastic. But I've read all the popular ones, you know, How to Make Money in Stocks, Market Wizards, Reminiscences of a Stock Operator, Trading in the Zone, all the most popular books in the market. But for me, none of them ever worked, okay? In addition, the things that did not work for me were blindly following other people telling me what they thought was going to happen, or when they thought a market bottom or a market top was in. That stuff never, ever worked for me. None of it ever worked for me until I sat down for myself. Now, it did take me a long time to figure this stuff out, guys, but I'm going to share with you kind of just a plan that I put in place to determine, just very simply. I'm a simple guy. I like to keep things simple. I'm a visual learner, and I like to see things visually. And to me, there is only one way, okay? There's only one way to determine what the current trend in a stock market is, and it's simple. It's not moon phases. It's not M1 money supply. It's not the Fed talking. It's not some cycle analysis. It's not a time relationships. It's not physics. It's none of that stuff. The only way to me to determine what the overall trend in a market is a consistent series of higher highs and higher lows. That's it. If you've got a series of higher highs and higher lows, we're in an uptrend. You want to continue pushing your bets, pushing your chips into the middle, pushing your plays in the market, buying stocks at lows, adding to your options, whatever you're doing in order to play a bullish market. That's what you want to do when you're in an uptrend. And alternatively, on the other side of the coin, if we're in a bear market, if it's going to be a series of lower highs and lower lows, right? It's very simple. To me, you don't need any of the FUD videos. Guys, you don't need me at all. You can do this all by yourself, and I'm going to show you exactly how to do this. I'm going to show you exactly what you need to do, the exact chart you need to pull up in order to determine for yourself what is happening in broad markets, so you can start implementing some of this stuff for yourself in your own trading. And for me, I always like to go with the trend, and the reason is simple. Now, some of those trading books that I mentioned to you guys before, they do have some good theories in them. You know, the trading in the zone, all this stuff. They have some interesting and good theories in there, although a lot of them are very complicated. But the problem to me with a lot of those books is the presupposition that every single bet / every single trade that you put in the market, it has an absolutely 50-50 chance. It's completely random what's going to happen in your next trade. Okay? Now, to me, that presupposition is completely erroneous and completely ridiculous, and I know it's wrong. I know for a fact that that presupposition that no matter what you do, no matter what bet you place in a market, no matter what trade you put on, that bet you place, that trade you put on, has a 50-50 chance of working out. The markets are completely random. On any given day, any minute of any given day, markets can either go up or down. End of the day, it's going to be up or down, and it's just a 50-50 probability. Guys, to me, that presupposition a lot of these trading books makes is completely wrong and completely erroneous. And I know for a fact it's not true, because to me, when you are in an uptrend in a series of higher highs and higher lows, you have a definitely statistically better probability than 50-50 of the day ending in the green. I know that for a fact. And there are different categories to this, right? So, for instance, I'm showing an uptrend here, and I'll get into this in a second. I'm not going to try to spend too much time on this video. It's going to be pretty simple, and I'm going to have a chance more later to dig into this with you guys at a later time. But to me, any time that you are supported on like a midterm trend line, which is what I would refer to this. I've got this thicker 3-pixel trend line down here. Whenever you are in sort of this area here of an uptrend, to me, basically anywhere inside there, you're more maybe a 65-66% chance of ending the day in green. Okay? Now, that definitely changes depending on where you're at. Now, the closer you get to the bottom of the trend line is the higher probability, right? So in these areas, you're operating more like maybe 70%, 72% chance of having a green up day as you near the bottom of these important midterm support lines. As you are nearing the top, that chances of a green day are going to lessen to some extent. But still, to me, the important point is anytime you are operating with a midterm line of support, you are going to want to be extremely, extremely cautious of trying to short markets, playing puts, whatever you're trying to do, or trying to utilize volatility in your favor. You're going to want to be extremely cautious and extremely careful anytime you have markets supported by one of these medium-term trend lines. And the reason for that is, again, probabilities are not in your favor on the downside of markets when you are operating with a midterm line of support in markets that is in an obvious uptrend, okay? And let me just show this to you guys here. Now what you want to do is you want to go to your continuous contract chart, sort of your chart with your overnights that includes data from the future and everything like that. And the best chart to do that, go to your trading view and open up this chart here. It's called SPX 500 USD. Okay, open up that chart and set it on a 30-minute time frame. And what you want to do is you want to get as wide of a view as you possibly can on the last, couple months of trading, whatever it is. You just want to pull back and you want to say to yourself, okay, so what's happening here? And you want to set a trend line. And you want to set your trend line on what appears to be the series of either, it'll be, when you pull back on the chart, it will become very apparent and very easy to spot what's happening in the markets right now. And you guys can see here very clearly we are in an uptrend. We've got these nice lines of support. In fact, this is an absolutely beautiful trend line on a midterm time frame that we have points here on May 12th, again here May 19th, broke through just slightly but immediately came back here on June 24th, another touch point here on July 19th, and another one here on August 19th. So this is a very, very well respected and very well established trend line we have here in place since May. So you set your trend line, 30-minute time frame, just connect as many of the kind of lows that you can see on your chart, and that will give you a very good idea, guys, of what's happening on a midterm time frame in the markets. Again, 30-minute time frame, the chart of the SPX 500. You want to make sure that you're utilizing, again, the chart here with the overnight data. Okay, that's why I use the SPX 500. It gives kind of the clearest, cleanest representation for trend analysis in the market. So that's the one you want to use. Now, so you can clearly see just by setting this trend line, and it's very, very obvious what the trend is right now, right? The key points here are May 13th and again May 19th, and just connect those two and you can see how nicely this lines up on all these touch points of this trend. So just looking at this, what's happening right now, guys? We are in an uptrend, right? We are in a strong uptrend. We are not in a downtrend, and we are not in any sort of imminent danger of a crash. We are not, tomorrow markets are going to fall out from underneath us. We are in a point right now in markets where you want to press your bets to the upside, because not only are we in this midterm strong trend to the upside on the S&P, so inside, and I've also I've also placed this other trend line here at the top, and to me this is sort of, I'm not 100% sure that this is valid or legitimate, but it kind of looked to me like some of these points lined up, and it almost looks to me like some sort of a channel in place here. I do have these nice touch points here on May 14th, May 25th, July 2nd, had another couple touch points here in the middle of July. So I believe that there may be some validity to this top of this channel. So just for now, kind of gives me an interesting point here to watch. Maybe in the next few days here around the 45.76 type area here, around by September 5th. But that's neither here nor there. It's just kind of something in place that I can watch. But inside of these, and I've showed this before on many, many videos. I know you guys have seen this before. You're probably tired of hearing me talk about it. But inside of these midterm trend lines, you have these micro-term trend lines. And guys, so we have this extremely well-established micro-term uptrend line inside a strong bullish midterm trend. Guys, to me, it is just nuts. It is crazy. Anyone who is trying to short this market right now and has been trying to short it really since this area here around August 19th, it's just nuts. Why are you trying to short markets in this area? You've got a midterm trend line that's extremely supported, and ever since here on August 20th, you've got this extremely strong point of a micro / short-term support in markets that are continuing to just push to the upside. And you do this for yourself, guys. This has touch points here at August 19th at 3:30 in the morning, August 20th at 3 in the morning, August 26th at 17:30, and then here August 27th at 7 in the morning. And again, the trend line, same exact trend line here, respected, came down this morning, touched it, and bounced to the upside. So we are working right now in markets in a strong midterm uptrend with also a short-term strong uptrend that is pushing to the upside. There is absolutely zero reason right now to be short this market. Now, that could be a different story, and I'm going to show you why exactly when we do potentially either come up and hit this channel. Definitely we're going to want to be more cautious as that happens here within the next few days, the next maybe week or so of trading, and more importantly, when we breach to the outside of this trend line that's been in place here since around August 19th. That is the point where when this trend line breaches to the outside, that, guys, that is the time that not necessarily you want to short markets, but you want to start getting defensive. You want to start pulling chips off the table and seeing where the market goes and see where the next kind of established areas of support and the next trend lines start popping into place. Because what is definitely possible to happen is, just like has happened here a number of times inside this strong midterm uptrend, we've had these drops here. Once we broke these shorter term trend lines, you know, we've gotten some significant drops here. Let's see, this one was a drop in markets of about 2.2%. Where did we have another breach here of a short-term trend line? Right here, okay? Right here, where we ended up having a break to the downside in markets, around 3%. Here was shorter. We had this nice short-term trend line here, broke to the downside, but still this was, let's see what this percentage was here, around 1.4%. Not the worst, not the best, but then you know, quickly reestablished a short-term uptrend, but then broke again for a larger one right here around July 14th. And then here, let's see, again we broke another short-term uptrend here to the tune of about 2.5%. So that seems to have been the average, guys, somewhere between 2.2 and 3% or so approximately. And to me, that's something that's definitely in the cards. If we, well, there's no ifs, ands, or buts about it. It is going to happen. Now, the point at which we breach is the point that's unclear right now. But to me, having these trend lines in place, you know, you've got the upper bounds of this channel, you've got the lower bounds of this channel established on a 30-minute time frame on the chart of the SPX 500, and it just kind of gives you an idea of where potential points of support are and where some potentially good places to put chips back on the table are, and where potentially places to start taking chips off the table and getting more defensive are. That, to me, is the only thing that I've found personally that has ever worked for me. Again, I like to keep things really, really simple, guys. I like to find these midterm and long-term trend lines, and then I also like to find inside, which always happens, you have these shorter term trend lines inside the longer term trend lines, and then that's when I start utilizing things like my RSI, my momentum, to try to kind of fine tune what I think is going to happen on these moves. So again, guys, I'm no market timing wizard. I'm nothing even close to that. I'm just someone who has, over the course of time, taken the time to kind of dig in and find what's worked for me. And the only thing that has ever worked for me since I've been involved heavily in trading the markets, probably 11 years now, is the establishment of trend lines. Long-term trend lines, mid-term trend lines, and then your short-term trend lines, and then trying to fine-tune that stuff with your technical indicators, whatever ones they are that you like to use. So the target, again, for me, possibly would be the possibility, right, when we're to break this short-term trend line here, a fall to this midterm trend line of around 3%, and that would definitely be something that's in the cards, right? But guys, until we come down here and breach this extremely important midterm trend line and start putting in a series of lower highs and lower lows, start showing some trend outside the bounds of what is a clearly established midterm upward trend line and upward trend in overall markets, there is not going to be any massive correction in the markets of 15 to 20%, whatever that's, whatever you guys have been hearing, whatever I'm hearing. It's just not going to happen, right? Until we start getting a move outside the bounds of this channel and the establishment outside this channel of a series of lower highs and lower lows. Markets just are not going to collapse. They're not even going to correct, right? We're not even going to have a strong market correction until we break outside the bounds of this midterm channel. Guys, do yourself a favor. Get this chart out on your own TradingView account, whatever charting software you like to use. Pull up this chart, the SPX 500 USD, put it on a 30-minute time frame, and just go back in history and start working some of this stuff out for yourself. It works every single time. You're establishing series of higher lows, higher highs. It gives you an idea of what's actually happening in markets as far as trends, where trends fail, where times to take your chips off the table, where is the time to kind of be defensive in your plays. It's not that difficult, guys. You practice this, I'm telling you. It works like an absolute charm. Just go back through your chart and set these trend lines, and you can see for yourself where these trends set up, where a good time to be long in markets is, and where a good time to be defensive in markets is. And you're going to find time and time again that this stuff works, guys. Set your midterm trend lines. It breaks. That leads to a period of increased volatility, and potentially that's when markets start correcting and start collapsing. Markets do not collapse when we are in the middle of strong upward trends. It just doesn't happen. Now, again, so yeah, we're again right now. You want to have, and I have had my chips in play, since this point here, but I still do, because I'm seeing a short-term trend that's strong inside a midterm trend that's strong. Why don't I want to play this to the upside? Now, is the upper bounds of this channel here definitively where the markets are going to have a small move to the downside, maybe back to the lower bounds of this channel? No, not necessarily. I want to wait and see what's happening with this trend line here, right? Very, very important. You guys don't, you don't want to rely on this stuff about what the Fed is saying and Fibonacci relationships and cycle analysis, all that stuff. Just pull up the chart. People want, I don't know exactly what the reason is, but people want to rely on every single thing they can find to determine what's going to happen in markets or what's currently happening in markets besides price action. Guys, to me, price action, higher lows, higher highs, it's the only way to determine actually what's happening currently in a market. You guys need to practice this for yourself. Pull out your charts, take a look at this 30-minute time frame. and you will never, ever, ever again fall victim to the FUD videos or the tactics that whatever market participants are trying to use to get you out of markets, get you on the sidelines when we're indeed in bullish trends, and markets are still bullish right now. Yeah, to me, there's absolutely zero reason to be short this market again until there's some established trend outside the bounds of this trend line right here. Guys, that's basically it for this video. So this is kind of a 2-for-1. It's kind of a, an analysis of the current what's happening in the S&P, but it's also maybe a video that on the channel that can be watched over time, and you guys can go back and watch this and see if what I said here held true, and something that maybe is going to last for longer than a few days on the channel, and you guys can come back to and watch and use in your own trading. I hope something from the experience that I've outlined in this video and given to you, you can find useful in your own trading. Don't fall victim to just what people are telling you, but use your own analysis, your own research. Guys, thank you so much for joining me in this video. I will talk to everybody again shortly. Bye for now.